Hi, this is Kevin Blanche. Today I'm going to talk about the dollar. Look, I've been out of work for a year. I've been a freelance global strategist, derivative trader, a wealth protection guy. I've been doing it for well over a decade. I signed 90-day contracts. That's how this industry works. I've been doing it for years. I got out of work. Got replaced by some computers, everything that was going on. I'm a wealth protection guy. Well, it's pretty sad when I got to go to work for a company in Bangladesh in Germany, but that's what I've had to do. But I want to talk about the dollar. That is my forte. Look, I went through the school of business of the great economist Mariner Eccles, right here, this town. I restored his office. He was the economist all through the FDR era. Brilliant man. A lot of people consider him maybe the greatest economist in American history. Well, you know, you hear all the time now spew economics. Friedman. Oh, I wish Mariner Eccles was alive to have a debate with this guy, because he's completely on the other side. Look, when we had the Depression in '29, when he became the Fed Secretary in 32, 34, he's the one that did the CCC. He's the one that did the WPA. He took it. I mean, his famous quote, I love his quote, was, if FDR was a traitor to his class, what am I? You know, he was brilliant. He was a genius, head of the Fed for years and years and years. He took the opposite side of the so-called supply economics we've had for 30 years. It has not worked. It has not worked. Now let's talk about the dollar in the context to your wealth. If you're a millionaire, billionaire, I don't care, in the United States, I'm speaking to you people in Europe too. Look, in 2000, the dollar versus the euro was 80 cents. It went to $1.60. That's a 100% move. Okay, we're at $1.40. So I weighted against things. So I weighed the Dow against the dollar. So the Dow was about the same place it was in 2000. Okay, weighted against the euro. You can do the math. You see where I'm going. Okay, that's how real wealth does protection. That's how this industry works. That's why real wealth remains wealth. That's why the great real hedge funds surviving these fake pieces of shit fell. Okay, so you weight it. So what's your money in the Dow worth? Your $10,000 or $100,000 or $1 million worth? Less than 60%, 60 cents on the dollar. That's what it's worth. Okay, let's weigh it against gold. Okay, let's weigh the Dow versus gold. Gold was $225 an ounce at 2000. It's $1,300. Okay, so your $10,000, $100,000, or $20,000. Let's weigh it against oil. That's what great economists do. That's what good economists do. They weight wealth. The traditional is gold. Oil has been used for the last several decades, big time, against foreign currencies. Weight it against oil. Your $10,000, $2,000, your $100,000, $20,000. That is what is happening to wealth in America. That is what has happened to wealth in America in the last 10 years. It has been destroyed and crushed. People, if you're investing, first and foremost, this must always be on your mind, especially if you're a global strategist or a global. This is number one. It is paramount in your brain all the time. Look, okay, so we have what we call classical meta economies. As one currency gets weak against the other, their goods will become attractive, right? Okay, so to all you Europeans out there, you've had a nice time buying up all our American goods that we do not make. So classical medicine we don't make anything anymore. Now granted, I spent a lot of time in Manhattan. I was at the national parks in southern Utah this year where I live, chock full of Europeans. Anybody that's been to, you know, New York City over the holidays or whatever last year, he knows it just millions of Europeans are all over that freaking city as tourism. So tourism has helped. That's the only thing, but they can't buy our goods. And if you don't think the wealth has went like this in Europe, you're wrong. Because I hear people, well, they're worse shape they are. No, they're not. No, they're not. Greece, Spain, Ireland, their central banks got in trouble. But listen, look what Germany's doing. They're not just slashing interest rate, kicking the can down the freaking road like we've done for 20 years. They're not. They're taking their medicine and getting it better. Look, Mariner Eccles would roll over in his grave. What Greenspan did, what Bernanke has done, Greenspan calls himself an Ayn Rander. Free market, free bullshit. He is no free marketer, please. Free market would allow interest rates to float naturally through the bond market. They have falsely slashed and slashed. He is using Keynesian economics to the 10th power in a sick, wrong way. Not how Keynesians intend them. And let's talk about Keynesian economics. Mariner Eccles is freaking using Keynesian type economics before Keynesian ever wrote any book. He is the father of that type of internet. Right here, Ogden, Utah. He gets no credit. But as an investor, you have got to keep this in your mind. Look, wealth in America has been crushed. Don't kid yourself. Now look, if you sold out 2 years ago your stocks and bought gold, you think, oh, that was a great move. Didn't do you any good. The market was under 7,000, it's 11,000. As a percent, yeah, gold made some money. So actually, if you just kept your money in your stocks, you'd been a few percent higher. Now, if you were smart enough to buy gold 2001, 2, 3, maybe when we invaded Iraq, boy, more power to you. You're great. You're a smart, shrewd. Those are people are genius. They're like these geese that are on this pond. These aren't domestic geese. These are wild geese. Goose hunt season is going right now. They know where to hide. So you people that did that, more power to you. Brilliant trading. Brilliant. Well, look, the dollar got crushed. I read the CBO's thing this morning on their valuation of the Iraqi war. 35 trillion. The Congressional Budget Office, 35 trillion. Think about this. Wow. And let's talk about our budget taxes. Nobody wants to pay no taxes, our philosophy. Iraq's philosophy was completely the opposite. He was like, look, the wealth, step up and help these people. You know, we need to create a strong middle class so that we could thrive again. Which for all those years in the 30s and the 40s, he did. And we thrived. After World War II ended, his philosophy was this. When Truman became president, he was like this. The wealth's going to step up. You're talking one of the wealthiest men in this country at the time. He says, we're going to step up for 4 or 5 years. We're going to raise the tax rate to the 1%, 95%. They did. And he's laid it out to the wealth and says, this is how we're going to do it. This is why we're going to do it. We'll pay this off for 3 or 4 years. Our middle class will get strong and we will all thrive together. It's like this. In 1975, and the middle class did thrive. From 45 to 75, the middle class became the strongest in the history of the world in the United States via his economic policy. Mariner Eccles, right here, this town. I went to his school. I've studied him freaking up one side down there. Born and raised right in the same town, right nearby where he was. Okay. 1975, the average Major League Baseball player in this country made 3 times what the average working class American. The average working class made $15,000. Major League ball player made $45,000. Today, the average professional athlete makes 600 times what the average American makes. Okay, let's talk about CEOs. 1975, the average CEO made between 30 and 40 times the average working class American. They make over 600 times what they make now. Think about these things. Think about these things. You know, this is history repeating itself. The same philosophy existed in 29. And this philosophy about supply economics, and if I got to hear Friedman go off, I wish Mariner Eccles was alive. I wish somebody would stand up and represent him. Oh, he would roll over in his grave with this guy. This supply side economics, we've been going 30 years. 30 years. Look, our military budget this year alone is $543 billion. Eisenhower said it himself in his famous speech at 58, beware of the military industrialized complex. Boy, is it here. Yet nobody we want to go to war, spend $30 trillion, and nobody wants to pay for it? Well, the working class can't pay for it because we have 50 million, 100 million people underemployed. The real underemployment rate in this country is 30, 40, 50% because our jobs are in China. NAFTA and this whole philosophical, it isn't working. We've tried it for 30 years. Yeah, it's trickled down right on our heads. We have got to change. And if you're a wealthy person in the United States and you think you've been hidden and saved, you're wrong. Weight your wealth. You go weight your stock portfolio against gold, against oil, against a foreign currency. You're getting crushed. This country is getting poorer and poorer. And the Europeans are getting ready. If you're in Europe, you're laughing all the way to the bank. Your quality of life has risen. Watch this dollar. I'm going to stay on this. Let's get real. America's got to come out of denial. Kevin Blanch.